All right, I'm live. It's official, guys. Hi, how's everybody doing? I'm using my ear pods right now, so I hope this doesn't get messed up. Let's see, is anybody on here? In the broadcast, not yet. All right. So I have my first guest. Welcome. My name is Teresa Timms, and I'm president of TDR Mortgage and Real Estate Group. And today I wanted to hop on and give you some, let me stop this music. I don't know if you can hear that. I guess I can't stop it. Oh yeah, I did. Got some dogs barking, some music going. Hi, I am giving a mortgage and real estate update. I think now more than ever, it counts to be as up to date as possible. If you're in the real estate or mortgage industry or some ancillary affiliate related industry, you need to have your pulse on the market. So I'm just going to give you a quick rundown today. There have been a lot of changes happening. I am what's called a mortgage broker. I highly encourage people that are seeking out a home loan to seek out the advice of a a mortgage broker. That's me. A locals only, a local mortgage broker. And one of the main reasons is that we have access to wholesale pricing. We eliminate the middleman and are able to deliver on-time successful results and the lowest rates on the market with the ability to shop multiple sources. So hey Shasta, Mike, you can hear me good, right? So I've never done the earpods thing before, but everybody's doing it. So anyway, so that's a rundown on the mortgage broker channel. If you're a real estate agent, I would highly recommend not only having a relationship with a mortgage broker, but also a local direct lender. I don't think that before I would always say, oh, you don't need a direct lender, stick with the mortgage broker channel. In this time though, I think it's a good thing to do. Okay, oh no, you got to see all this no makeup business going on. I'm curious, Shasta, what do you think about, so on this COVID thing, we're either going to come out, hey, keep it down. Got serious business going on here, serious business. We're either going to come out of this, like, stop. I'm a mean dog, mommy. We're either going to come out of this afterwards, like a la natural, or we're going to like start back up at work of like full sets of makeup, fake lashes, and the whole deal. I myself am enjoying this no makeup business, so I don't know. We'll see. It is fun to play dress up, though. All right. Hi, Christine. How are you? Hi, girl. Hey. All right, so let's get down to business. We're here to deliver some very important news. It's very business-like, and so we're going to be professional. I'm going to put on my professional game face and do this. I can't even say that with a straight face. Okay, so here goes. Okay, so what's new in mortgages? Well, gosh, ask me tomorrow and it might be 100% different. Things are just developing strangely and rapidly. We get a little bit of notice before things change. One of our leaders in the broker world, Anthony Casa, at the end of March told us that government was going to drastically change on the 15th, and we're seeing that VA loans very difficult. They're almost not doable because of the pricing. So what's happening right now is that, I mean, think about it. Would you like to lend your money to someone buying a house right now with the uncertainty of future value, with the uncertainty of the person's job, with the uncertainty of knowing that, even before that loan has a first payment, that person is going to apply for forbearance? So lenders are erring on the side of extreme caution. So FHA has certain guidelines. However, lenders are not adhering to these guidelines. They're implementing overlays for self-preservation. And those overlays are things that are making the loans less risky. So that's what's happened in the mortgage market. It's also interesting too. Hi, Jer. It's also interesting too that, okay, so I don't know, I'm a purchase originator. I'm doing an FHA loan. I tell my client, okay, you can get in with 3.5% down, or you know what, at 3.5% down, the rate's 3.5, or I raise the rate to like 4% and I cover all your closing costs. Maybe I don't cover like $1,000 of cost. It's doing that very, very often. And even in the conventional loan world, how we would do no cost refinances is we raise the rate a little bit to cover the spread and therefore make it no cost. The no cost option is largely not an option anymore. Lenders, another thing they're doing for self-preservation is that they want that loan out of the gate with a low rate to prevent against future churn, to prevent against future refinance. So right now it's just very strange how when I look at pricing and what I'm able to do versus what I just did a month ago, what I've been doing my entire career. So being able to adapt quickly and change gears quickly. There was a book that I came across the other day. I just came across this. I'm like, oh, don't look at my fingernails. Don't do oh, shoot. Conquering Shifts. And I thought, oh my gosh, I haven't read this book. I need to get on the ball. But that's what's happening right now. We got to master that shift. So what a loan product. So HELOCs, home equity lines of credit, those are gone. I don't know if you guys heard last week, Chase and Wells Fargo are not doing loans unless you're putting 20% down. So let that be an indicator of where we're headed in terms of loan availability. If HELOCs are gone, you're going to have to cash out refinance to access money. And in this market, with the cost of money being so low, around the mid 2s for a 15-year, 10-year, and the low 3s for a 30-year, it sometimes is a wise choice to go ahead and cash out at those low rates. Buyer programs. I celebrate the buyer programs as an alternative to get people in when they don't have any money, and it's a great, amazing vehicle. However, I don't know anyone lending in that space right now. My go-to is the CalHAPA loan, the California Housing and Finance Authority out of Sacramento. I love, love, love them, and they're in business. I just don't know anybody that is wanting to take on the risk of a loan like that, right? It's all about risk. So it's jumbos are largely gone. However, this week I spoke to my friend David at Refi, Dave Johnson, and he sent me some jumbo product, and I called him to find out about it. And Refi does have a jumbo product. That's one of my preferred lenders, that wholesale lenders that I submit loans to. The restrictions or the guidelines, I guess, would be very, very tight, but there are jumbo alternatives out there, and a mortgage broker is best suited to find those opportunities in lending because we have so many choices. High balance loans. So high balance loans, I have some notes down here on my little laptop, that's why I keep looking down. High balance. Okay, so what that is if the conventional loan limit across the county is 510 and you go over, and let's say you buy a $600,000 house and your loan is 550, then that puts you in the high balance space. In the Inland Empire, poor Inland Empire, they don't have high balance. So they go, once you go over 510, you're in jumbo land. And again, jumbos are scarce right now. And I don't think those are coming back anytime soon. People don't want to lend in that space right now. And this all has a lot of shaking out to do till we kind of start coming around. I kind of think it's going to be 60 to 90 days. It just depends on how quick we get back to work. Okay, so I priced out this high balance like 3 weeks ago. I have a friend, Julio Rana. Hi, Julio. I'm going to have to tag you in this later. High balance in, gosh, I forget where it was, somewhere out in LA. And it was pricing out okay, like in the 4s, high 3s, low 4s, with like a point. And I couldn't get it to price out. If somebody came to me with a high balance and I'm looking at all the options, you'd be paying like 2 or 3 points for a high balance loan, and you had to have a 700 score So I didn't spend a lot of time finding all the different ins and outs because I'm not placing one right now today, but I did look at one for a client that's going to be purchasing in the future, and it did not price good. And so I bounced. And that leads me to one of my points below, is that FICO scores are paramount. If you are going to refinance, if you are looking to purchase, don't mess around. Take some money and invest it in some quality credit repair. My friend Sam Parker at My Credit Guy has excellent programs. And I think the first 30 days he doesn't even charge. So if you're buying a house and you're going to spend, 10, 15, 20 grand, what's $600 to get your score? Invest in yourself. What's $600 to get your credit in like tip-top shape? I'm waiting for home prices to drop so I can pounce. That's a great strategy, Christine. I talked to your brother a couple of days ago, and he's getting ready to pounce also. So I think that is amazing. So I think that the next 30 to 60 days, for those of you wanting to purchase, let all this craziness kind of calm down and spend time working on your credit and get those scores up. If you'd like to get information, I'll put his information down in the wherever I have the comments or whatever. And if you're just joining us, or if you're watching this on any of my social media or YouTube, please like and subscribe and comment. It means a lot to me. And I like to know what people are thinking. I like to get feedback. I would like to be able to be a resource. And so if I know what your questions or concerns are, I can speak to that. Okay. Oh, non-owner properties. Well, this is kind of I wouldn't say bad news. It's just news. We can still do those non-owners, those properties that are rented. But again, think about the risk. So rental properties are suffering right now because people are being told they don't have to pay the rent, or you're not going to be evicted, etc. So you better believe if a lender is going to be refinancing a non-owner property, they're going to want some significant reserves on your part. I've been seeing anywhere from 6 to 12 months reserves for each investment property, and they're probably going to want to see, I haven't seen this guideline, but it's only logic that they're going to want to probably see the last 6 months of rent payments on that property too. What else? Okay, now for the good news. Are you guys ready? Ready for some good news? All right, let me scroll up so I can read it all, because I want to capture all the good news. Because bad news, it's plentiful right now, right? Plentiful. Okay, are you ready for some serious business? Rates are, I want to say that F word right now, but I'm not gonna. Freaking fantastic. Oh my God. So I priced out a 15-year the other day and almost lost my mind because I was quoting a client, a highly qualified client with a lot of equity, 2.5. Actually, I think I sent that fee sheet out today, 2.5 on a 15-year loan. And he was paying like $4,000 in the amount of points or costs for the loan, plus like regular closing costs or whatever. But are you kidding me? He shaved off, or he's going to shave off, $117,000 of future interest. $117,000. His payment's going up like $150 or something ridiculous. So this is a great time to go rate and term and really take a look at preparing for the future. If you're in a position and you're working, fortunately for you, you can take advantage of these super crazy low rates. Okay, so let me give you the rundown. 30-year fixed, 5% down is pricing out around 4-ish. High 3s, low 4s, and you're probably going to pay a point or a point and a half for that. I really didn't see a lot of opportunity to do that 5% down loan at no cost. Now, an FHA purchase, 3%, let's say low threes, and you might pay half a point, you might not, but God, that's great. That gives you so much purchasing power. And I think if you're out there right now looking for a home loan or looking for a home, you probably don't have a lot of competition. So I would have to say this, you waited for it, buyers, and now it is your time. It is your time. It is officially a buyer's market, if no one's been telling you that. I know everyone's talking about how great the housing market is. It's going to come back, blah, blah, blah. Y'all know I don't quite believe that. What is my golden rule though? If you can buy a house and the mortgage payment is the same as about what the rents are, buy 10 of those little suckers. So if you're in a position and you'd like to get out there and start looking right now, you reach out to me, DM me, or leave me a message, or go through one of my channels. tdrmortgage.com has a really easy application process, and we'd love you to hop on there, or simply text me to get started so we can take a look at what that looks like for you. And if you're not ready to buy right now, what about, you want to prepare yourself for the end of the year? It's never too soon to prepare yourself and get in a perfect position to, as Christine Fern says, to pounce. Okay, what else? Oh, gosh, I think I covered it all. So I talked about earlier that the rate in terms are in the low 3s, which are pretty amazing. That's helping out a lot of people. And then the cash outs are a little bit higher. They charge a little bit of a premium to take cash out. 3.3, 3.5 with a $3,000 to $6,000 cost is what I'm seeing. So I think that's it. That's all of my good news. No bad news. We're not going to talk. We're not saying anything bad, because you guys have like a ton of that right now, right? So I'm not. I refuse. I will not be the bearer of bad news. Over at TDR Mortgage, we are closing loans. We are closers. That's what we do. We make things happen. We make dreams come true. Okay, that sounds super corny, huh? Cornylicious. Hi, Steve. Okay, so if nobody has any questions, if you'd be so kind and courteous as to like, comment, and subscribe below, I would love it. It would make my day. Okay, feel free to share this with your friends and family, share the good news. And if you're out there, my friends, and having a hard time, just know that my heart is with you, because I know it's not easy to come out and to be positive and deal with all the stuff that we have to deal with, especially if you're at home and you're suffering and don't have any money coming in. That all of the relief and assistance, it's been slow coming for a lot of you. And so I want you to know that my heart and my thoughts are with you during this time, and I'm just thinking good thoughts. And I just want to tell you I love you, and you're not alone. Y'all have a great day. Okay, I'm going to stop now. Where do I stop? Stop button. Oh, end the broadcast. Okay, I'm really going now.